Former GM Chairman and CEO Dan Akerson. Dan, really appreciate you coming on to talk about it today. Good morning.
Good morning. How are you?
Good. I'm curious, some people are reading this move as some kind of comment about a coming economic slowdown. We talked to Lutz yesterday on the air, who said it's more about just changing tastes, consumers preferring crossovers. How do you read it?
Well, I think two ways to look at it. A, the SAAR, average sales per year, is declined by 1 million units just in the last 12 months. So there is some weakening, and that might be an indicator leaning forward. But fundamentally, the industry is oversupplied right now. In fact, GM's plants are running at about 71% capacity. You can't make money consistently and produce cash to fund your future ambitions, moves that I think are necessary to position the company for the long term. So it's more complicated than one might think.
I guess I'm asking, would it have been any different if these plants made the Sierra instead of the Cruze or the Impala?
Well, there's another dynamic that's going on at the same time. If you go back just 5 years ago, 4 or 5 years ago, about 50–60% of the vehicles made in America were cars. That number has now dropped to 25–30%. That's a precipitous drop and a tectonic shift. And at the same time, SUVs, crossovers, and trucks have gone from about 50 to close to 70%. You have to adjust, and that means that there are certain plants that have been focused on cars. It isn't the Cruze specifically, but to give you an idea, just 5 years ago when I was in place, there was a 3-shift effort put on at Lordstown. Today, they can barely support a 1-shift. And the dynamics, the decisions aren't made in the Oval Office or the boardroom or on the factory floor. They're made around the kitchen table. The consumer is driving these numbers, and the market drives the decisions by the company, and the company's just, they're adjusting to reality, and that's sometimes a hard decision, and it's very difficult to sort that through over the long term.
Dan, do you think this series of measures GM announced yesterday, then, given the industry overcapacity that you mentioned, are going to be sufficient for GM? Are others going to have to essentially do the same kind of, shrinking the manufacturing footprint that GM is doing right here, especially given, obviously, steel prices up and the overhang of tariff threats?
Well, already Ford and Chrysler have announced similar actions, and I think GM has taken it a step further. Because the second dynamic, besides the marketplace that's operating, is the future. You need free cash flow in order to fund the future of the company, because who knows what the new marketing dynamic will be. We don't know how the millennials will use mobility generally, and GM has had to put $500 million in the Lyft. They're funding Cruze, they're funding Maven, they're looking at alternate forms of ownership, and so not only the dynamics of today shift to trucks, SUVs, and versus cars, because what happens is the industry is so evolved that trucks, SUVs, and crossovers give you the utility of a truck, if you will, or an SUV, and at the same time they've been upgraded to the point where they give you the luxury of a car. So there's a lot of moving pieces on the board here, and I think GM's playing it for the future, and this is something that old GM didn't do. They kind of stood by and waited for the obvious to become patently obvious. And what's it's happening now is that the company's trying to anticipate change, and it's dynamic, and I don't know exactly, and I don't think management knows precisely how it'll play out over the long term, but I think the intermediate term is pretty clear. They need to become a leaner, faster, more responsive company.
Yeah, well, I'm curious as to your thoughts, and it's David Faber, Dan, about the future you reference. I mean, there are some who see, obviously, autonomous vehicles, fleets of them in certainly urban areas, if not even suburban areas, significantly mitigating the need to actually own a car and therefore having real pressure on overall sales. Is that a future you could envision?
I think it's inevitable, especially in the urban areas, that you'll see autonomous vehicles much more prevalent. Well, they're not really existent today, but they'll become much a factor to play for over the longer term. And ownership itself, I mean, you've got Uber, you've got Lyft, you've got Maven, you've got partial ownership, it's hard to guess where it's going to go. So you got to think of it in terms of mobility and address different perspectives and aspects of the problem. And I think that's what the company's trying to do.
Dan, how is the company, how are investors supposed to respond to a president who tells the Journal that they're playing around with the wrong person, that they better damn well put a new plant there very quickly?
Well, at the end of the day, we have a free enterprise system, and the decisions are going to be made, as difficult as they are, for the long-term survivability of the company. These decisions weren't made back in the 1990s and early 2000s, and the inevitable came to pass, and the company went into bankruptcy. As I used to tell the management team, we went through Chapter 11, we're not going to go through Chapter 22, i.e. another bankruptcy. And in order to avoid that, regardless of the politics involved, you're going to have to make the best decisions that give you the best prospects for succeeding in the marketplace. Again, this isn't a decision made in the Oval Office or boardroom. It's being made in the showroom with the customers, and you can't ignore consumers and what their preferences are for the type car, crossovers, trucks, SUVs are clearly driving the marketplace today, and the company is simply adjusting to that. I'm sure.
Dan,
I'm sorry, go ahead.
Sorry, one of the other challenges that obviously the industry is facing is a little bit of a backup in interest rates. And the industry has essentially been in this treadmill for a long time, right, where people buy as much car as they can finance. Is that something that you think is going to be a lasting issue right now? Is there going to be a big change in how cars are bought along those fronts?
Well, again, there are alternate forms of ownership. You can have shared ownership, Maven. You can, there a lot of different variables. About 25% of the car buying public today, as I speak, are credit challenged. And one of the first things the new management team did post-bankruptcy is we reestablished a financial arm, GM Financial, and it's been a very successful acquisition. So again, you got to play the game that's on the table today, and you got to try to anticipate what the game's going to be played, how it's going to be played in the future.
And Dan, when you talk about that future, do you have an opinion? You know, you're clearly indicating how GM is positioning itself to be able to compete, but that future is going to be joined by Waymo, as you mentioned, Uber, Lyft. It's very different than the marketplace they've been playing in, the major manufacturers, for years. Any sense as to what's going to be or who's going to be the winner?
I think the winner is going to be the company that's able to adapt as fast as possible, anticipate the future, and be right. And so you're going to have to, it's like a game of cards. You're going to have to play the hand that you're dealt, and right now, GM's trying to change. They're looking for a couple more cards. They're trying to show more flexibility. They're trying to free up cash flow in the future so they can play the electric game, so they can play the shared ownership game. And it's critically important that the company position itself while it's healthy, not in a crisis. That was the past behavior of General Motors, and I don't mean to be too critical here, but they let events overcome them. I think this management team is doing absolutely the right thing. They're trying to anticipate the future, and they're trying to take bureaucracy out of the management team. At the same time, they're trying to address that it's 71% of capacity. That's what's being used today in their plants. You can't run a company of this size, this magnitude, of this global reach, and your primary market is only 71% of capacity.
Dan, good comments. Really appreciate it. Hope you'll come back. The story is going to evolve over the coming weeks and months. Dan Akerson.
Thank you.
Appreciate it.